Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again, and yeah, wonderful to be alive once more on this Thursday, this trading Thursday. Yeah, I know. Yesterday, maybe a bit of a disappointment for some people, right? Definitely never love to see just kind of diagonal lines down and to the right, see the price go down. But we might have some signals here that might point us in the right direction as in terms of some recovery. Some mixed signals. This is the kind of the thing. If we're seeing bottoms, is like there's always this little kernel of doubt. It's like, is this really it? Is this really the bottom? Are we due for a reversal here? Um, I do think we have a good chance at a pretty decent reversal still this week, but of course that always comes with some ifs and some maybes and some conditionals. So we'll walk through some of that today. I think I'll also take some time to point out the Ultimator 9 has also been putting out some new indicators for use on TradingView. For those of you who use TradingView, definitely haven't had too much time to poke around these indicators myself, but yeah, they are worth checking out. So definitely, kudos out there, the Ultimator 9, for your hard work on putting together, on coding these indicators. But if you haven't had a chance to check them out yet, definitely go ahead and do that. I'll go ahead and put the links down in the description along with my article each day. And of course, Ultimator is also linked in the post too. If you go there, you can get over to his X page and whatnot. So you definitely check some of that out. Yeah, so let's get into our stuff today, right? Finger on the scale, bottom insights, our question mark. Yeah, we're gonna see, right? I mean, finger on the scales. We see this sometimes. We'll get into our analytics. There's what really caused this price action that we saw take place yesterday. And some, to me, it looks like familiar stuff. Maybe there's something else at play, but we'll walk through that. Let's go ahead and get to our page of gratitude here. Today's newsletter and video is brought to you by Puma the Dog 21. Puma the Dog 21. Thank you very much for my coffee today. Thank you for sponsoring this newsletter. Of course, thank you as well to Det Scruffdo and Ken Wedmerland, who generously contribute every month to offset some of my data expenses. I have a number of different subscriptions to data sites, premium data sites here that I use to put together my research, my videos to put together these newsletters. So both these individuals have been generous to help make that a little easier on me. So definitely appreciate that. And of course, thank you to everyone who's contributed in the past and has contributed already and is waiting to be thanked here in our gratitude section. Of course, everything that I do, completely open access, completely free, no paywalls, nothing like that. So definitely thank you everyone for your generosity so I can keep doing this. Thank you very much. Yeah, thank you. So yeah, market obviously looking great yesterday. I know, right? We don't always have that kind of direct type of correlation with what the broader market is doing, but even still, right? Usually we do have some decent correlation with between GameStop and what's going on in the broader market. And this is sort of, I would say, the first data point to point out that GameStop was exposed to some of these finger on the scale mechanisms. So things like interventive shorting, whatever, as we'll see in a second, some stuff going on in the options market, kind of pressing the price down, despite the fact that conditions were looking pretty good for it to do something different. Right, we didn't get that technical reversal in that kind of 2650 area. We did end up closing around 26, which, all things considered, is considered as a decent sign. Market was looking good yesterday. We did finally get that all-time high midday. A SPY crossing the 613 threshold. As long as we are trading in and above this kind of 610 level, kind of 609 area, above 609. We can expect these low volatility conditions to continue. We can continue to expect stable trading up toward that 615 call wall. Um, I would say, based on what I've seen so far in the options market and what I've seen continue to develop, what we've talked about here is, um, this optimism, right? I talked about this a little bit yesterday, but here it is visualized for you guys, right? We can see we have a lot of optimism heading into this OPEX. We have a lot of net call gex that is piled up, assumed long, based on the way that traders typically engage with SPY options. So a lot of net long call gex is stacked up here going into today, going into tomorrow. Right, a third of all of our call gex, a third of all of our call gex is concentrated for this options expiry. We soften up a little bit heading into next week. Get a little bit more neutral. Still call gamma positive right now. The 28 still, still in that call gamma territory. 27 right now on the fence, kind of neutral. But what does kind of pop up there then, and I've mentioned this, is March is pretty much kind of cordoned off here as being a down month. And that's what we got. That's what we got last year, right? Heading into March OPEX, and then through March OPEX, right? We had this kind of bear cauldron. We had this dip cauldron in SPY, and then that corresponded with that big sell-off we had after Q4 earnings in GameStop, which was actually what preceded this crazy huge requel, right, move to the upside in the May-June period, right? That was the setup for that. So we do see that kind of environment in terms of a little bit of fear, right, with net puts accumulating here, especially for March OPEX. What I will note, and that I think I pointed out yesterday a bit, is that the 18th and the 19th we have another Bank of Japan meeting, and there are potentially some fears that Bank of Japan will bump up the interest rate, the central bank interest rate, by another 25 basis points. That type of move has usually coincided with a GameStop sell-off. We saw that in August, and turns out it wasn't immediate, but GameStop did dig a little deeper after a few days. So no, we did after the weekend. We did get one sell-off, and then we probably got a second wave of it the following week. Right, part of it was blamed on DeepSeek, and then part of it was supposedly Trump talking about tariffs, something like that. Some of this might also have to do with Trump tariff stuff, insofar as he talked about certain February tariffs being postponed to March, and then he said he wasn't going to do the tariffs, but only do exactly only reciprocal tariffs. So if other countries have no tariffs for the U.S., then the U.S. will have no tariffs for other countries, but those countries that do have tariffs will get hit with an immediately reciprocal tariff. Which, that's a more reasonable kind of plan in terms of, from a game theoretical perspective, right? That's just basic tit for tat, or forgiving tit for tat, something like that, right? If you cooperate with me, I cooperate with you. If you don't, I only cooperate. I will only cooperate or not cooperate with you to the exact degree that you will not. That you will cooperate or not cooperate with me, something like that. Pretty basic tit for tat strategy. Yeah, we'll see how that plays out, of course. But this is not a video necessarily about politics, but some of that, my point is, might be reflected in how traders have opened long put positions heading into March. That's basically the gist of what I'm getting at here. And right, we should be wary, I should say, to expect of what that might mean for GameStop heading into March. But at least in terms of what we're looking at in the broader market, looking bullish heading into the end of this week, into February OPEX, still looking decently optimistic heading into the end of February. That does start to change as we move into our later weekly expiries for March. Yeah, so then this pattern, right, diagonal line down on essentially no news, a couple of reverse, or a couple of head and shoulders patterns kind of popping up here, this getting walked around a bit. But basically, right, we just see this kind of diagonal trend down, no particular news, although we did get, right, we did get supposedly before pre-market, right, the, without the stock especially dipping, right, we got Market Watch saying that GameStop was dipping after, quote, the plan to sell their, their international operations. You know, I don't know, right? I mean, maybe. What do I know? But I can see right from the data that steadily throughout the day, GameStop was shorted. Right, we can see that. So in the morning, we started out the day with 2.6 million. We had 100,000 shares shorted in the first hour of the day. By 2:30, we had another 100,000 shorted, and then by the close, we had another 100,000. And then by the opening, I should say, of the overnight exto period, another 300,000 shares were unavailable for settlement purposes. So we got down to about 2 million overnight. And now pre-market, we're back up to about 2.7 million. I checked this a little while ago, so let's see if that's still what we're looking at. We're still at 2.7 here. Back down to 2.6. So exactly, looking like exactly where we opened yesterday, despite some of that share shuffling. Whoops, I made that pretty big. So we had a bit of this, and then another thing interestingly was we had an excessive amount of premium. I should say an excessive. It's not an excessive amount. It's within GameStop's kind of normal ranges. Just unusual for this low of a volume day, right? We were back down to about 4 million volume. Unusual to see this much of a skew in premium, right? You'll notice that Unusual Whales went ahead and highlighted that over 64% of the total premium on the day was skewed bearish. That's about as bearish, I think, as I have ever seen in terms of a skew. Not sure exactly what that means, but right, we did just have a ton of calls at 30, 40, etc. For basically January mostly sold. A lot of them were sold. And of course, because these are pretty expensive contracts, there was quite a lot of premium that was raked in as a result of these sales. So this looks to have been whoever was collecting all of this premium really got our total premium value skewed on that. So it's not a ton of contracts, but I mean there were a lot of orders. So I wouldn't be surprised if that also, put a few 100,000 more shares of bearishness, of sort of bearish hedging pressure on our price action yesterday, in addition to what looks like to have been about 600,000 shares of gradually deployed shorting throughout the day. So that's enough to kind of carry the price down, to kind of get some hedging pressure through options contracts that are already or which were already established at that point, to kind of carry things down. What was interesting to me while I was doing my write-up here was that we did in the pre-market here very quickly tap down to 25.71 and then bounce back up, and we're still bounced up basically off of that. And that was interesting to me from the perspective, right? You can see we have this historic price level here, which I've marked off with this red line. If we go down to our technicals, we zoom out a bit, right? So that would be this line right here. We did touch exactly this price level at 2 points back during our November bull run. So back, what is this here? Yeah, so we got this touch after this kind of like sort of double top kind of formation heading into, I guess this was November OPEX. So just prior to November OPEX, and then coming out of November OPEX, actually into November OPEX, we sold really hard. We sold really hard down. We went down, we touched the 54-hour moving average, which we had used as a support much earlier at 25.70. And then that's when we made our push up into 30. And then we had our first kind of big breach of 30 thereafter. But right, we used that 25.70. Then that same price level, that 25.70 on the other side of November OPEX, was was exactly as far down as we got during the after hours sell off of quarter three earnings. So quarter three earnings, we had this huge candle in a few minutes, right? We shot all the way down to that 25.70 level. Then we shot all the way up to exactly $31, which was um, right at the top here, exactly as far as high as we had gotten on that the Roaring Kitty Time U cover tweet. And then we traded within some local parameters, some local technicals at that point. But just very interesting to see that price level. And because of that, because we kind of did that twice early in that run, on this side of things, on the way back down, it served as a hang up kind of a thing. So kind of several times we used this as a support in our bear trading in our bear run down here. We used it as a support as well last week throughout the day, right before we had that huge up candle, right? So that huge up move immediately after market hours. This one kind of wick here, right, that goes all the way down to this reference level, right? That was that mystery trader. That was the 24.69 after hours mark there. But we stayed above 25.70 all throughout the previous days pre-market and overnight period. And then we stayed above that level going into the trading day the following day. And then, of course, it was then that we exploded up after that. So heading back down here, touching this pre-market may serve, right? This may serve as a reference level, as a support. This may function as something of a bottom, given that it was exactly at this level, right? Exactly at this price level that this very large candle took off. So actually, if I zoom in here, right, where were we? I shouldn't say that the very large candle took off. I take that back. That is where we essentially opened on the day that we um, had that move up. So we opened at 25.70, and then we moved up throughout the day. We had a kind of a mildly bullish day. So from 25.70 to, let's see, 26.40, so a mildly bullish day. And then immediately after close, we got that huge candle. So interesting, right? So we've now come back all the way back down to that kind of bullish current there. And what I'd like to point out, I can change my screen over here. What I'd like to point out is, yeah, one of the new indicators that the Ultimator 7 over on Twitter, and he also posts on Superstonk with some regularity, has come up with recently. He's got some, this is called the GME Bottom Finder, he calls it. Supposedly only works with GME. Not sure what time frames, he hasn't specified. But he has this kind of custom indicator here that is supposed to be able to pinpoint when, well, I suppose with a high degree of accuracy, when GameStop's bottom is in. So if we look back, I was looking at this over on the 1 hour chart. And of course, this is untested, not exactly sure, right? I have no idea, even he says so, right? But, this does seem, if you go look at kind of bottoms historically, it does seem to predict with some decent historical accuracy as to where the GameStop bottoms are, kind of giving you like a day's head start. So for example, if we look at the 1 hour here, the bottom indicator did go ahead and give a very strong signal that the bottom had been reached right when we got down, right when we kind of tucked right below 25.70 there, right on the 12th of February. So the day before this really big candle happened after hours. Then we started to move up, of course, that day, and then we had that big candle after hours. As we look at things today, right? I mean, the indicator pretty flat, and then yesterday it started to move pre-market, and then we got a really strong bottom signal, like really strong relative to this chart, heading into the close yesterday. So this to me, right? This to me at least suggests like, okay, maybe I'm depending on how this works. It's closed source, so I don't know exactly what's going on here, what values it's using. But right, this is something that Ultimator is using to try to pioneer this type of stuff, and it does seem, at least from what I'm looking at, that this does kind of line up with our technicals. Some other instances where we saw this was back on February 5th. So February 5th, we got a bottom indicator. And then we had kind of a fallow day, although it didn't go lower. And then kind of two in a row, kind of traded up a little bit when we got the actual bottom signal. But it wasn't until right then the 10th. And then we just opened up on the 10th and then really started to move. So right, historically, this does look to be the case. That this, within a few days. So, for example, if I were going to use this, and Ultimator says, obviously, right, don't go use this to time your trades or anything like that. But just from, an epistemic point of view, I am curious to see to what extent this, number one, the accuracy of this, does it actually predict price bottoms going forward? Can you use it as a forward predicting indicator, number one? But number two, then what's the precision? What's the margin of error? So for example, here we have about 3 days. If you're looking at the hourly chart, we have about 3 days. We got the indicator, right, 1, 2, and then on the third day we go off. The next time we got the signal, it was 1 day before. Now we got the signal pretty strong yesterday, right, on the close. And then we saw that 2570 level pop up here, in our kind of pre-market period. So does that then mean that we start tracing to the upside? I don't know. I don't know. But this is why, right, asking questions and looking at this stuff is intriguing, because we can find out. So I would say in recent weeks, this has been, the accuracy of this looks promising. But let's find out here. Let's find out here. So just putting that on your radar. You might want to check that out. Right, Ultimator's made this free on TradingView. So if you go over on TradingView, you can just type in GME bottom finder, and yeah, this will come right up for you. So let's get back over to our regularly scheduled program. So yeah, right, we do have this here. It is the bottom of this this kind of formation. We had a chance, right? We had a chance to kind of preserve this upward channel structure. We ignored that, but now we are kind of back immediately to the bottom of this, where we took off here. So right, maybe we trade up a decent amount into February OPEX, something like we saw January 17th, right? We got that pretty violent candle into January 17th. Pretty cool. It was about a $1.50 move at 1:45 p.m. It sold completely all the way back down, but it was a very interesting thing, right? From 27, what is this, 20, all the way up to like, almost 29, right? 28, it was like 28.77 or something like that. So pretty big move to close the day. So, we could see something like that develop. To go from 25.70 kind of, back up into, well, I think 27, right? That's kind of what I said here in my own article, that if we don't get something big, right? If we don't get like a Roaring Kitty tweet or something like that, and we kind of just stick with normal volume, we could see even just kind of a local reversal back up to about 27. And if we'll come back to the OI data in a second, right? Well, I mean, the OI data, not terribly interesting. We did have one trader close a bunch of puts. So one trader at $28, and it was just one trade, closed 1,000 puts at the bid. So a trader with 1,000 long puts at 28 said, done with this, I'm out, cool, yesterday, there we go, and closed those puts, took profits. So, I mean, certainly a bullish signal to see that trader was like, yeah, you know what, don't think we're going any lower this week. Very interesting. Max pain value for this week still at 26.50. It's solid 26s all the way out now into March OPEX, where we have 25. So we've got a lot of 26s except for this week, which is 26.50. So, I mean, none of that projects any kind of catastrophic price collapse. If we go down to our gamma exposure data, we can see we don't have a lot really below us to suggest that, we couldn't run down to 25. We definitely could do that if somebody wanted to nudge us. I suppose it depends to what degree these signals that we're seeing, maybe if whatever altimeter's indicator is tracking here, if whatever we're seeing in the technicals, right? We see there in the technicals too. 25 kind of makes sense as the only level we would kind of move back down to. We have that 2469 share, that single share there after hours. We did have a touch of this line I put in here is the 200-day moving average. So we've got the 200-day moving average as a reference level to our downside. Today during the day, that's 25. Right. So this sort of seems to me, and 25, of course, is a psychological number on top of that. We might have something of a put wall effect, depending on what the composition of that level is. It's hard to say. But 25 does look like a reasonable support. Like that's a big support. So I think even if we do start moving to the downside today, 25 kind of that's kind of all we've got there, and it's already served as a pretty strong support, right? I mean, anybody looking at this will say, "Oh yeah, we touched 25," and then we got these two really big waves back to the upside, going up to 31.66 after hours. So, just looking at it from a technical perspective. So, if we do move down to the downside, 25 is kind of it. But let's say that we don't. What could we do? Well, I think even on kind of low volume or kind of normal options activity, a normal options activity induced recovery, kind of if we stay low volume, 27, assuming what is typical of trader orientation on calls, which is that traders are usually long on calls. Um, we would see 27 basically stand out as something of a resistance point, right? And that's barring some kind of catalyst. If we see some kind of indicator, like if we see, I don't know, if there's some kind of momentum indicators that pop up, or something is going on with a swap roll, something like that. That's another thing. Altimeter seems to have thought that there was some swap activity actually playing out yesterday. He also came out with um, I think he calls the swapinator. Let me see if it's here. Can I find this? Didn't see. Wait, that's not what I want. Expand you. There we go. Yeah. He also has, if we go back over here, he's also got an indicator called the swapinator to try to track swap rolls, to track swap roll dates here. So not sure how well it works, but it does kind of line up. Yeah, it lines up pretty well with some of these deeper bottoms, which is basically if you check out Richard Newton's videos, essentially what Richard thinks is the cause of some of these deeper dips on specific dates. He does see that they kind of what he's looked at in terms of trying to figure out what causes these deep dips is adjusting the price, right, manipulating the price down in order to accommodate these swap rolls. So it's really interesting to me that certainly these two indicators that altimeters come up with, the swap roll indicator, the swapinator, and this bottom finder, kind of agree on this. Right, we get these kind of strong signals on both here. So yeah, Altimeter thinks that indeed part of what was driving some of our price action yesterday was swap activity. I don't know if he's picking that up specifically from his swapinator here, or exactly what is guiding him to think that. But putting that out there, maybe there was some sort of swap activity taking place yesterday that really drove that. If that's the case, right, what we tend to see, and I went back and looked at this, right, I would say that actually, right, the swap roll thing is actually supposed to be for one day. So okay, we don't. It's supposed to work on the one day, so I take that back. But he did say that he thought that had something to do with swap activity. But he did say that the swapinator here, this upper indicator, is normalized for use on the daily. So it showed that we had a swap roll on the 7th of February, and it showed that we likely had one around the 16th or the 17th of January. Not sure to what extent that is the case, but that seems to be the guidance from him on looking at these. So okay, whether that is the case, if that's passed, then maybe there is something that happens with that pass, that there can be some share covering or something like that, or however the price is adjusted to actually accommodate these swap rolls. Um, if now the price can just fly again, if it's free to do so, then yeah, I mean, and we get some kind of catalyst like that, right? Maybe if we get a Roaring Kitty tweet, which someone has pointed out, I forget exactly who pointed this out to me, has occurred every time we've had a short or a holiday week for the past month and a half. So yeah, maybe we do get something like that. Something comes in. If it is a bit heavier, right, we could see a lot of this call gamma. Yeah, it could cause something like a gamma ramp, right? A lot of hedging, market maker hedging activity can cause a lot of buy pressure from the underside and kind of walk us up here, like we've seen happen during these formations. And part of that is just the density of calls that we see packed. So it's not just one strike, right? If we have a call wall, but then like kind of the stuff underneath it is kind of light, that might not act as kind of a pull. But what we see here is we see 27 has a lot of net call gamma, 28 has a lot of net call gamma, and even the strikes in between it have a bit. 29 has a decent amount, and 30 as well. So, and these will intensify as we start to move up. It doesn't look like very much in the way of ROI has retracted at those strikes based on what I've seen in ROI data. So that could happen if somebody, again, right, like what I said yesterday, if somebody wants to come in and try to light this fuse, like you know, it could run, it could go. Like we could see a lot. We could see a lot happen. So where does that leave us? You know, as far as yeah, where does that leave us in terms of whether we're going to get something like that? You know, mixed signals, right? It's kind of a crapshoot. I hate to say like, oh yeah, it's definitely, well, there are some stuff, right? I have seen stuff where it's like it's very very clear to me. We saw some of that stuff in the fall. Um, you know, the thing is now, right? I've seen some of these setups that look very likely not necessarily play out as much as we'd like them, or kind of we get a delay and something like, right, or what we saw last week. We saw some of that stuff kind of go off in the after hours period. So this is the other thing too. We were not in the fall without the 24-hour market. We weren't seeing that stuff. Now we're starting to see this kind of stuff take place at weird times. So definitely throwing kind of the after hours bit in, or the 24-hour market in as a curveball does look to have moved at least some of these events to after hour stuff. But then again, back in May, June, we saw some of these really huge movements occur also in the after hours period. So, I don't want to be, my point is here, I don't want to be too committed. I don't want to, necessarily get anybody overly excited. I certainly don't want anybody to think that this is an exhortation to go buy options contracts or trade on what we talk about here. But I will say that to kind of sum this up structurally, we do have potential to get a pretty decent upsize move. We do have some indicators that look like they're converging, as well as potentially, right, some new indicators to explore in terms of what the Ultimator 9 out there has been building. Certainly very interesting. If this does end up panning out, this might be something else to kind of add into our analytical toolkit. So definitely go check that out, right? I mean, I certainly, right, a lot of the time, right, what I do with my own trading strategies is like, really most days I'm not opening trades. Most days I'm coming out here, I'm looking at this, I'm trying to understand what's going on with our price action, and only when I'm kind of like, all right, I'm feeling good about what we're looking at here, I kind of understand where we are in the navigational landscape. Do I really just have the conviction to go ahead and pull the trigger on something? A lot of days I'll spend looking at the charts. I'll spend looking at our price action to say like, okay, let's see, right? Or am I going to be right about this element? Or how's this going to fit in with models that I've worked out in the past? Or can I add in a new kind of analytical tool to my toolbox and see what that does with how I'm, understanding what's happening here. So very interesting to me to have, these two new tools from the Ultimator to be able to, to improve our understanding of what's driving our price action on a regular basis, which is my goal here with what I'm doing with these newsletters, of course, to get to get as usable, as clear, and as accurate of a model of what affects GameStop's price action on a regular basis. To keep myself better informed as a trader, as an investor, and hopefully to give some insight and a potential leg up to all of you out there. So thank you very much. Definitely go check out Ultimator's new stuff, and let's see what happens today. Going to be an exciting day, I think. So we'll see you next time on 21st Century Renaissance. So we'll see you guys. Take care.